Should Jerome Powell be reappointed to head the Fed? Answer, that's the wrong question. Hello, I'm Steve Forbes, and this is What's Ahead, where you get the insights you need to better navigate this turbulent world. Will President Biden give Jerome Powell another term as chairman of the Federal Reserve? Powell's current one expires early next year. Senator Elizabeth Warren, Representative Alexandria Ocasio-Cortez, and certain other members of the Democrat Party's socialist wing are opposed, saying he's too soft on banks, while advocates such as Treasury Secretary Janet Yellen, herself a former Federal Reserve chief, declare Powell has demonstrated he is a capable captain in this tumultuous era. But the real issue of the future of the Federal Reserve goes far deeper than the personal fortunes of Jerome Powell. The thinking that dominates the institution, indeed, what passes for economic truth these days, is fundamentally fallacious. There are three basic flaws. First, the Fed worships at the altar of the Phillips curve, which posit that there's a stable, reliable relationship between inflation and unemployment. If you want lower unemployment, you must have higher inflation. Conversely, low inflation means higher unemployment. Experience has shown the curve to be nonsense, but it is still Holy Writ at the Fed. That's why the Fed repeatedly calls for inflation. Second, the Fed doesn't really grasp what inflation is. It confuses price changes that are a result of the marketplace. People want more apples, the price goes up, with price changes that come when the value of a currency is altered. In other words, when the central bank prints too much money. Call that monetary inflation. This is the deadly version kind of inflation, the kind that pockmarked the 1970s and also gave us the disastrous housing bubble of the early 2000s. Only a policy of a stable dollar will conquer monetary inflation. Now, the marketplace, if allowed, will sort out supply and demand shortages. Today, we're suffering a mix of the two kinds of inflation. COVID-19 deeply disrupted supply chains, creating shortages that fired up prices. Add to that the Fed's excess money printing of 2019-2020, and you get what we're experiencing today. Now, finally, there's a third deep thinking flaw. The Federal Reserve and most policymakers these days believe the central bank can guide the economy by manipulating interest rates and printing money. Experience routinely demonstrates the preposterousness of that idea. The Fed can only have an impact on economic conditions, but steering the economy like a tanker or a car? No way. Chairman Powell faithfully reflects the bogus theories guiding monetary policy these days. Worse, he has endorsed the Biden spending binge, which, if enacted, guarantees serious economic trouble. But a replacement from this White House would be no better and probably worse. A real change at the Fed will only come from the pressure of events. I'm Steve Forbes. Thanks for listening. Do send in your comments and suggestions. I look forward to being with you soon again.